This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. On today's podcast, we discuss the growth of Retire Smart and the third annual Teammates Golf Tournament. We'll also investigate current events, including President Trump's recent statement on a trade deal with China, the latest U.S. job numbers, and the impact of AI on companies like Google. Join us as we break down these topics and more. David, we're going to get to all these items in our agenda today, but I just first want to note, we have some more. I can hardly keep up. We're hiring so many people these days. We got a bunch in the studio with us today. With each wave of these young people who come in, I feel even older, but that's progress, I guess, for Retire Smart.
I don't know. I get a text message from our director of finance when I have to hit submit on each payroll, and the number gets a little more
I imagine
depressing every time. I'm like, what?
Well, we're well north of 40 people now.
Yeah.
Riley is training to be a new financial advisor, and she mentioned that watching our YouTube channel was part of what sparked her interest in Retire Smart. That's good news. As I've mentioned before, there's a reason I've done radio instead of television over the years. So the cameras, I'm still a little uncomfortable with
now
those.
That she's actually fully on board, wait till she gets access to the blooper reel and some of your legendary comments that have not gone out on the airways.
Look at the clock. We better keep moving here. All right. Hey, the third annual Teammates Golf Tournament fundraising for the Tom and Nancy Osborne Teammates Mentoring Program was June 12th. We are now the lead sponsor for that event. You played. We had 3 foursomes. How was it?
A lot of fun. The weather was a lot better this year than last. It was a little hotter last year, so bearable this year. So anyway, we got some pretty good golfers in our team, and we got a few folks that just went out and had some fun.
Okay. Saw the whole course.
Yeah,
a lot of
value
shots.
Per stroke, as they call it, right?
Yeah. Okay. Well, good. Well, great event. Great cause, of course, Teammates, and we're happy to be the lead sponsor now for the Teammates Golf Tournament every year. The College World Series comes to town, starts this weekend, David. Any favorites in the field for you? There are a few Cinderella possibilities, Coastal Carolina and Murray State, and then you've got some heavyweights, Arizona, Oregon State, Louisville, UCLA, Arkansas, and an Omaha fan favorite, LSU, is coming this year.
Yeah, LSU always does well with the Jell-O shots, we know, and the donations go up at the bar that does that. But I got to pull for the underdog. So Murray and Coastal Carolina will be the two that I'll probably be pulling for.
Well,
so I love a good underdog story.
We'll see if one of them captures the home crowd this year. All right, into the news we go, David. Right before we sat down to record this show, you sent the team a statement, a social media statement from President Trump. Let me read the statement and let's get your take on it. So the statement is, our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied up front by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me. We are getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention to this matter. David, your take.
So the markets liked the news when the tweet came out, at least the pre-markets as of Wednesday morning, and then the markets, were up a little bit, but they're not like ripping up 1,000 points. So, and I had sent a comment out when I put that into our internal message to the team that the markets are going to want real details really fast, or the markets may start to fade, because no longer can you get the market to move 1,000 points on the idea of a deal. They want to know the framework, and this gives you a slight bit of the framework, but it's still not an actual deal, subject to approval by me and Xi. So he's left himself room to back out. And of course, we haven't had any official statement from the Chinese delegation or, of course, the president himself. So we'll wait and see, but at least it's moving in the right direction. What I would like them to do is reconcile, okay, if we're going to charge them, say, 55% tariffs, and they're going to charge us 10, what is the net benefit to our economy? $10 billion a month in new revenue, whatever it is. If that's $120 billion a year, now let's run back to the House and say, all right, knock $120 billion out of the lowest income people, those under $100,000, which was the goal, right? To charge them nothing potentially in taxes. So move those savings over and show the American taxpayer that, okay, the whole reason for this is so you can pay less out of your wallet to the tax man, and you may pay a few dollars more for the products you buy, but you'll net win out in the end, right? Show us the numbers.
All right. You're not really going to be satisfied with this until you can see the direct application of what the results are.
No, because we cannot keep spending, and I'm all for keeping the tax rates, and they want, extending what we call the tax cuts. Well, they're the rates, right? And so it is a little bit unfair scoring by the CBO. If we leave tax rates the same, they're saying that he's raising, the deficit. Well, the deficit's projected to do that anyway. So let's get back to a balanced budget. Let's get serious. And I like that we have now 4 senators in the Senate pushing back hard. Hey, you're going to have to cut some serious money. So I think we're a long way from home, but we shall see.
Speaking of back here at home, we got the May job number recently, David. Here's a CNBC headline. U.S. payrolls increased 139,000 in May, more than expected. Unemployment at 4.2%. I want to combine that. I want to pair that with this next headline, David. Fed, this is from Reuters, by the way, Fed likely to leave rates unchanged as U.S. job market cools but doesn't crumble. So the consensus to the May job number seems to be kind of meh. We had some pretty robust March and April reports, but May seems to be leaving people, I don't know, kind of stuck in neutral. How do you see it?
Well, you have to go under the hood to look at these numbers.
All right.
Just as we did with the last administration, we got to do it with this one. So we actually lost 639,000 jobs, or there's 630,000 less people working than there were a month ago. So they said we gained 139,000 jobs, but the unemployment rate was 4.1, Chip. You said it was now 4.2. It actually went up, and we have less people in the labor force. But that's less people actually working, doing productive things, paying taxes, spending money in our economy, and the job market is softening aggressively. Google just announced another round of cuts, a large employer. So we're going to continue to see this, and inflation, we just got out the CPI on Wednesday morning. It was better than expected, lower than most people, and I told you it would be last month, right? Now I think you're going to start to see that finally go the other way. Inflation will start to tick back up in the summer months. But the problem is, if the job market starts to fade, the Fed is going to be caught behind the 8 ball, so to speak. They keep saying, hey, we don't want to lower rates. Well, the European Union just cut for the 10th time last week, right? So they've made 10 cuts since the Fed's done anything. So the world is saying we got to lower interest rates because of the crazy amount of debt everyone is floating out there, and we have to now float because of the interest payments on our debt. Now it's $10.8 trillion we have to float this year. $10.8 trillion in new issuance has to come to the table, and if we're doing it at 4 to 4.5%, that's disaster. That's another $300 billion in interest payments alone per year.
Well, let's go there, because in the Reuters story, it quotes President Trump. He says, go for a full point. So he's talking about 100 basis points. Go for a full point. Rocket fuel. If inflation reignites, raise rates. What do you think of that?
I will tell you, if the Fed did that, that would be seen as a panic move, and you'd see a really ugly sell-off in the markets. I mean, very ugly. What we just saw in February would look like child's play, because that would be forecast into the markets. We're behind the 8 ball, even though I think they are behind the 8 ball. They can't, they have to message everything. It's how is the message received? Interest rates are going to be 100 basis points lower by Christmas, I believe. Now, when do they do it? That's the question. And typically, they're not going to do 100 basis points at a time unless we're in an all-out catastrophe. And that's what happened during COVID, happened during the great financial crisis of 08, 09, right? But if they're signaling that, then they're telling you it's really ugly what they see. And that's just it. They're not transparent with what they see. They're trying to thread a needle. And it's like it's Powell's got pride on his chest. Well, I'm not cutting rates just because. Well, you said if you got inflation near it, so why did you cut 50 basis points last September when inflation was still above 3%? Oh, we're making great progress. Well, if it's at 2.1 as it's reading now, then can't you cut further? So again, they make no sense with their statements, but it's going to be bad news near term. Keep your eye on yields on the bond market. I've been talking about it for a while. It's much more important right now to pay attention than the stock market.
David, I'm going to alert our producer, Shannon. I'm going to jump to the story that you referenced just a moment ago. It's a CNBC headline. Google offers buyouts to employees across the company, including search. What is it exactly that's happening at Google?
So the advancement of these AI platforms, the LLM platforms, learned language models, so ChatGPT, Grok, et cetera, all these models are replacing at a ridiculous speed search. Google last month, for the first time in their history, Chip, reported a decline in search volume. Wikipedia just this week got overtaken by ChatGPT. Just one of the such models gets more traffic now per day than Wikipedia, which is one of the most popular websites in history. So we're seeing a vast changing of the guard, and it's happening so fast, even these tech companies that are involved and invest in it are not keeping up. So Google, they make all the revenue from search, right? When you go search something, I mean, it's a verb now, right? What did you do? I Googled it. And you might go DuckDuckGo or another browser to look for it. So it is really, it could be doom and gloom for Google if they don't adapt fast enough, because all that search revenue, ads, we spend money on ads digitally. When you click or you get an impression, if they put the ad in front of you, a company's paying for that. Well, if you're not on there searching, then that ad revenue is going to drop like a rock. So they're quickly having to figure this out, and more to come. And if you're using these products, you'll notice if you have a Gmail account, they're blasting Gemini, which is Google's version of AI, in your email. Hey, try this for free. And then they'll get you hooked on it. And then, oh, it's only $25 a month, right? So they're going to be shifting from an ad model to a subscription model, and they're having to accelerate it before they lose their revenue.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week. Tom Osborne and teammates are not clients of Retire Smart and were compensated for this sponsorship endorsement, as such term is defined under SEC Rule 206, subsection 4-1. For further information about this sponsorship and the compensation details, visit retiresmartnow.com and click on the Sponsorships tab.